Right, get some thoughts on some of the performers on our market. Northern Star talking about performers, the best performer at the moment.
James, it certainly is. It's up about 9%, best performer on the ASX 200, as you say, and that was a result of a positive announcement from the company today. They have, in fact, indicated that their FY14 production has been well ahead of their guidance at all of their operations. So investors certainly taking to this news well. It has been a very strong performer. In fact, over the last year or so, it's been up about 68%. And we know that the company has been quite aggressively acquiring quite a number of gold mines over the last 12 months or so. Of course, back in May, we saw that they acquired the Jundi gold mine over in Western Australia from Newmont Corporation for about $82.5 million. And prior to that, they acquired another 2 gold mines from Barrick Gold for about $100 million. So really, they are expanding their portfolio of gold mines. Back in October last year, they in fact made quite a substantial discovery of thermal coal. They are investing about $2 million into some initial drilling for this coal. But I really think the strength we've been seeing in the share price is a result of a lot of this gold acquisition. And really today's announcement will further add to the positive outlook on the stock. They've also indicated that they have cash on hand of about $82 million versus $67 million in the previous quarter. So really this indicates they may have the potential to further expand and acquire some further gold mines as well. So certainly does look pretty positive, and today's strong report does reiterate our view on the stock.
What have you made of Alumina's share price performance? I mean, we're seeing it quite weak at the moment, and that's despite obviously Alcoa in the US outperforming expectations.
It is an interesting one today, James. As you say, it is a negative performer. We did in fact see Alumina yesterday up around 1.4% ahead of this Alcoa result. So coming into to today's trade, we were expecting it potentially to be a positive performer, of course, after we saw that pretty strong result coming through from Alcoa, and we saw Alcoa shares up around 1.4% over in the US. But I think we are seeing a lot of this weakness today as a result of the company announcing that their margins are continuing to come under pressure and have in fact declined in the second quarter as a result of that higher Australian dollar and of course higher oil prices. And also, of course, they are continuing to experience some difficult industry conditions at the moment as a result of that lower demand out of that Atlantic region and China as well. So I certainly think probably as a result of these announcements from the company, we are seeing some weakness today. But I think long term there are some analysts out there that do remain pretty optimistic on the outlook. They do believe that the company will benefit from potentially higher alumina prices and possibly a weaker Australian dollar in the years ahead. And some are also expecting that they may in fact return back to dividend paying, reflecting sort of a stronger performance coming into the second half. So although we are seeing a bit of weakness today, I think the outlook for the stock does look quite positive.
And your thought just more broadly on the market, down 1% at the moment?
It is, James, unfortunately, another negative day. I think there's probably a couple of themes driving our market today. Of course, we did see the US lower overnight, investors taking a bit of a breather after we did see those record highs last week. And of course, ahead of earnings season, we did in fact see those internet and tech stocks the worst performers. So as a result, we are seeing our information technology sector, one of the worst performers today, down around 2%. We also saw European markets lower, and we saw some of those financials and bank stocks over there worst performers. So our financial sector as a result is also coming under pressure. But of course we did see that consumer confidence data coming through earlier. It was up around 1.9%, although I think a lot of economists and analysts were of the expectation we'd get a stronger result coming through. So as a result, we really haven't seen our market pick up after that. We are seeing the consumer discretionary area the worst performer on our market today, but of course that is being driven lower by that negative announcement from Navitas as well. But unfortunately, another negative day.